Hi and welcome back to Cheeky Crypto. Today guys, we're going to be diving down into the charts, taking a look at Bitcoin, what's going on, what was expected, what's not expected, and what might actually happen next here with BTC. As we get into this video, if you do find it useful and informative, hit the like button. I really do appreciate that. If you happen to be new to the channel, then do go ahead and subscribe, tap the bell, select all notifications, and you will not miss another video update. Right, with all that said, done, and out of the way, let's jump on down into the charts, take a look at some trading view data, take a look at some Glassnode data, and give you my thoughts on what's going on here, what was expected, and what might actually happen next. Okay guys, so just going to start off with Glassnode here, and I just want to kind of point out that the balance on exchanges is still incredibly low. Okay, so what you're witnessing within this recent kind of crash or pullback, however you kind of want to articulate it, the balance on exchanges is still incredibly low. Retail investors, you know, if they're actually smart enough to buy and hold the asset rather than using leverage, aren't getting stomped out of the market and not being shaken out. What you are finding though is people who are using leverage are getting wrecked, and it goes in both directions, right? Price pushes up and anyone going short is going to get wrecked, and any price goes down, anyone going long gets wrecked, right? So unfortunately, leverage positions are getting stomped out of the market. Same with stop losses from market makers, etc. Right? Now we did see Binance buy up 43,000 Bitcoin without actually doing too much movement on the price of BTC, right? And this is because they're using the pockets of liquidity within, you know, liquidation events and of course stop losses, right? So as long as we are aware of what is going on, we should be okay, because you know we buy and hold assets and we do not use leverage, and we do not really unless there's a reason to use a stop loss, and we also don't tend to do sell orders unless, you know, we're doing it for examples and things like that. We tend to do more manual kind of work, and you have more control over what is going on in the market. So I wanted to kind of show you this one. I also wanted to kind of go through this one as well, which is one of my personal favorites, which obviously shows you the net percentage or the net position change, I should say. So obviously you can see where red is basically more Bitcoin is leaving the exchanges than is going in. During the May crash for Bitcoin here, you can see that the balance on exchanges was increasing from a net position change, which is really good to see. And then obviously you start to see something strange which was occurring over the last few months, right? So this is very much your standard kind of position. This is what you would expect to see, right? Price pushing up, you start to see Bitcoin leave exchanges. When the price pulls back down, you tend to find that Bitcoin goes onto exchanges. Pretty logical and pretty much something that you would expect to see. But recently what you've actually been seeing is the price of Bitcoin pushing up and the Bitcoin on exchanges going up, right? Very, very strange. You wouldn't normally see that. It would be the other way around. This basically tells me that there are people, whales, basically loading up onto exchanges slowly, gradually over a period of time as that price is pushing up, okay? And they're doing this to potentially manipulate the price, you know, sell, bullpack, but it's not leaving the exchanges as is visible here, right? Very, very small amounts. And what you see is the price pulling back down, and as that price pulls down, you see Bitcoin leaving. But this is definitely not what you'd expect to see. You'd expect to see Bitcoin on exchanges going up. This is telling me that whales are basically using their ability to basically take Bitcoin off of exchanges by taking advantage of liquidity pools or liquidity pockets within the chart. So i.e. the prices, they're able to kind of push it to very specific price points. I've spoken about this before. And as a result of that, they're able to liquidate certain positions and basically acquire that Bitcoin without actually doing any movement to the price, which is how institutions and whales actually accumulate any kind of asset, because they don't want the price to fluctuate rapidly as they are in the market. They want to control every single movement. So they actually look for and source pockets of liquidity, and this is kind of what you're seeing here. As they are basically manipulating the price, they're able to basically take advantage of those liquidity pockets and actually remove BTC from exchanges. So as the price is pulling down, Bitcoin is leaving, and it's very, very strange. Now, of course, we start to see something that you would expect to see. You see Bitcoin pulling down and Bitcoin loading onto exchanges again. Okay, so this is very much what you would expect to see, but the volumes are incredibly low. Okay, so this basically tells us that there are some retail investors who are maybe succumbing to some fear. Maybe they're looking to maybe liquidate some Bitcoin at some point during this correction because they fear crypto winter or something like that, right? But this data is very, very clear to see from this particular chart what you would expect to happen versus what is currently happening, which is not logical in terms of how this would normally flow through. So it's really important that we understand that, okay? And as we actually take a look at it from just exchange balances, being really low the way that it is, it doesn't concern me. And I'm going to now get into some charts as to what is going on, right? So as we've spoken about many times over, specifically with the members in Discord and Patreon, we've been heavily kind of analyzing BTC and several other assets, right? And this was an expected pullback. I've spoken about this so many times, right? 37K has been expected because our weekly chart indicates it, our daily chart indicates it, our hourly chart and our 4-hourly chart is indicating the same level. Okay, so you have consistency across the time frames as to a very specific price point. Now, I'm going to tidy this up a little bit, okay, and I'm going to really focus in on a couple of things because I was expecting this to go impulsive. And I want to confirm whether that is the case or not, okay, because there's a few things that are going on here. So we obviously had this pullback straight away just inside here, and we can argue that this is, there's a lot of micro movement, so I want to try to make this as macro as I can. So we have an A wave here, we have a B wave here, and a C wave coming down. I'm going to pull it down here. So you had this ABC. Inside here, there's a lot of movement, so I'm not going to dwell on those too much. Then we see there's an ABC to the upside here, A, B, and C. Okay, nothing unusual about that. But then we get this huge A wave right here. Okay, and effectively you could argue that what you have is this actually is a larger C wave. So if I take these off, what we could be looking at in terms of a macro scale would be this as your A wave, this is your B wave, and now we're entering to C wave, okay? So what we want to do is we want to measure, okay, what is going to happen here? Where are we likely to go to? Where are we going to bounce up to before potentially pulling back down any lower, and how low does that go, right? Obviously $37,000, we haven't reached that target yet, and that is pretty much a target that has been consistent across these. So what we're finding is we've pulled down, we went from overbought to oversold, so now we're looking for a bounce, right? So what I'm going to do is I'm going to show you where I would anticipate a bounce being, okay? I'm going to throw this fib on here, okay? So first of all, I want to kind of just highlight a couple of areas and grab my horizontal ray just here. So the first one I want to be kind of really focusing in on is going to be that 786. The 702, which again is just down here. So I'm going to go and throw that on. And then I'm going to do the 618 as well. Okay, then I'm going to remove the fib so get it out of our way. So here we go. So I'm going to remove this one as well. Right, so we have our 3 key areas. In fact, I'll remove that as well. There we go. Okay, so these are the 3 key areas that we're looking for a bounce. Basically, effectively 41,300, 41,400, 41,800. Okay, so we're right in that kind of anywhere between 41 and 42k. That seems to be the most probable area. So what I'll do is to make that a little bit more visible, I will go ahead and draw a rectangular box just on here. Okay, and then I'm just going to quickly remove those lines as horizontal rays because I don't need them anymore. Okay, cool. So now we have a bit of an idea, right? And what we want to do is we want to see, what actually occurs here next, right? We should be expecting that bounce to the upside. Now, the reason that this is really important is I was expecting an impulsive move to the downside, okay? And the reason for this was that we actually had an impulsive move earlier on, right? We had 5 waves, 3 waves up. We then had 5 waves down, 3 waves up. I was expecting 5 additional waves down. Very nice, neat, an example of a 5-3-5-3-5, something that you would expect to see within Elliott theory and an impulsive move generally. But we aren't seeing that impulsive nature just yet. Now, we could, of course, mark this up as 5 waves, which I think it'll actually represent 5 waves in the end. And that's because I think we're going to end up with this A wave up here. Actually, it's not even necessarily an A wave. It's going to be probably more. Let me actually just get rid of that. It's probably going to be more like that. So an A, B, C up, and then we'll probably end up with another A, B, and C taking us down into that 37k zone. Now, if we were to really think about that, what you actually have on the macro scale would be effectively a wave 1, a wave 2, a wave 3, but if this crosses, it wouldn't be a wave 4, so it wouldn't really tie in neatly there. So it would have to be shorter here and then come down. So there is a way that you could argue that maybe 5 waves appear, but it doesn't appear to be coming into that kind of way of thinking just yet. So one to watch out for But for now, it looks like very, very corrective action, a bunch of ABCs. Now, with that being said, we are looking for this bounce to the upside and lots of different ways of counting it, right? So, we'll be coming up before coming down. And I do think that is actually in itself an ABC move on one of those scales, on those micro scales, right? So let me just tidy that up a little bit. So this is our A wave coming down. Our B wave should be about here, and then our C wave coming in here. Now, if that is the case, what we want to do is we want to measure the distance here from our A wave and put this over into our box here. In order for this to kind of be in line with that $37,000 range, we want to basically be inside this box, okay? Closing inside this box, or getting the reversal inside this yellow box area in that kind of $41,000 to $42,000 range actually puts us right in this right zone for a C wave, okay? So if we actually go to the 786, you can see how the C wave would actually complete just a little bit lower than 37,000 on this line, but it would actually be approximately 37,100, for example. So a good kind of way to say, okay, that looks like, again, another confirmation of the very same area, but it does first of all rely on coming up into those higher ranges. Now, that stochastic RSI does look like it is able to support such a move to the upside. Okay, so again, one to monitor this situation. We're looking for good action up here. I don't think it'll be a straight line. We'd probably end up with some kind of ABC in there, as I said before, and some kind of ABC coming down here. It's all very corrective in its nature. I don't think there's anything impulsive about what's gone on here, which was unusual because we were tracking impulsively down before. Now, of course, all this is inside 5 waves, okay, so which is why I was expecting 5 waves in here. But with that being said, ultimately we are in a pretty good position here once we see this this bottom truly come in. So I do expect a little bit more downside, but I expect the push up first, then the pull back down. Now, the reason that I say this is really important because as we come up into our larger time frames, we can actually start to acknowledge what's actually going on a bigger macro scale, and that's this all-time high of $77,000. Okay, so one of the things that we need to acknowledge is that we are trying to track into a 5th wave higher, and we actually set a new all-time high and we pulled back right in. This could be a very shallow 5th wave, but it doesn't align to what you would expect to see with a normal 5th wave. So I still feel that this is still in play. And what we're looking for here was an ABC correction, and now we're tracking for a nice A wave up that set the all-time high. That was impulsive in its nature. We are looking at tracking down with an impulsive move down, a corrective move down, an ABC down on this larger scale. That's our C wave that comes in at $37,000, and then we track up, which should be an impulsive move, a 1 through 5, taking us to $77,000, right? So obviously we get drowned out by looking at the hourly chart, the 15-minute charts, whatever, right? But actually, when you zoom out, you're actually getting an idea of what's actually going on a bigger macro scale. Now, there's a volatility here, but there's nothing outside of the unexpected, right? Because what we have is a B wave coming down to the 786. There's nothing unusual about that. That's pretty much where you would expect it to be, right? 618, 702, 786. Those are always the 3 key areas that we look for. And then obviously measuring the 1-to-1 ratio with an A wave puts us out there at $77,000. Now, obviously, there's a few things that we have to be concerned with. First of all, as we start to see this track down a little bit, we need to be very mindful of what would invalidate that. What would invalidate $77,000? Well, in order for that to be invalidated, we have to pull all the way back down lower than our 4th wave low, okay? Effectively, actually invalidating a 5th wave altogether, and basically invalidating our ABC move up. Okay, so we're basically saying we have to drop down lower than 28,700 to invalidate moving to $77,000. Okay, so when we start thinking about the laws of probability and what's the most probable outcome, the $77,000 is looking pretty good, and there's quite a big drop down before that even becomes invalidated at this point. Okay, not impossible, of course, it is very possible, but it's not, in my opinion, very probable, okay? And therefore, I am thinking that we are likely to see this actually play out, and we are looking at new all-time highs. As you can see, that stochastic RSI on our daily is being nicely corrected, almost oversold on our fast line already. And this is going to be indicating that we are looking for another big push to the upside. And again, as we scale this back up into our weekly view, the same narrative is also said, but we're heavily oversold on our stochastic RSI already, which means we are already already primed, ready to go for this next move. On this weekly chart, you can see exactly what I'm talking about a little bit clearer. There's not a lot of drawings on here. You have the big ABC move, you have our 5 impulsive waves up, we have 3 impulsive waves down. We're looking for tracking an additional 5 impulsive moves going up into this C wave high. Okay, and ideally we would actually like the bigger macro piece, the big ABC move, to be impulsive in its nature. For that to happen, we have to pass $93,000 without any major correction following or it being sitting inside there. So for now, obviously off the tables, we'll talk about that as time progresses. But for now, we're tracking exactly as planned. We're looking at the $37,000. We were expecting a push up and a pullback down into that range, which means there are going to be some discounts available to many of those altcoins as well. We obviously did this for the Patreon members over in Discord with Cardano recently. Actually dropped down a little bit lower than I was expecting, causing an impulsive move for Cardano. So I think there's even heavier discounts available for ADA right now as well. Potentially over the next few days, we should expect to see Cardano reach some pretty interesting levels of accumulation, and across many other assets, including Harmony One and many others, are looking pretty good for some buying opportunities as well. So if you haven't already joined us over in Discord, go ahead, check it out. It's completely free. Links in the description down below. There's a fantastic community talking crypto 24/7. Likewise, if you're wanting a little bit more in terms of analysis, strategy, accumulation, etc., check out the Patreon services in the description down below. It'd be fantastic to have you over there as well. Right, with all that said, done, and out of the way, I'm going to leave the video there. Hopefully you have found it useful and informative, maybe reassuring. If you have, hit the like button. I really do appreciate that. If you happen to be new to the channel, then do go ahead and subscribe, tap the bell, select all notifications, and you're not going to miss another video update. Right, with all that said, done, and out of the way, I hope everyone has a fantastic day, and I'll catch you all in the next one.